This is the October 8th, 2018 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and president, McGowan Group Asset Management. This week, two big stories. Trouble in tech land on Thursday. We'll cover that sell-off and some warnings for investors. And we had an interest rate spike on the 10-year and 30-year U.S. Treasury. You can see the 10-year U.S. Treasury yield rising to the highest levels really since early 2014. Same thing on the 30-year U.S. Treasury, not a new high above that, but close to some of the higher levels of 2013, 2014. That led to a technology sell-off. Let's cover the broad S&P rally first. S&P 500, we did a comparison here from October of 08, which included the final 6-month sell-off in the crisis, and the S&P 500 is the white line here. We compared it with global high yield, one of the leading funds, and then we also compared it to domestic high yield. With dividends reinvested, even after the S&P 500 rally, you can see that the domestic high yield actually has a higher total return, 240%, annualizing at 13 through the crisis, 230% for the S&P, and 224 on global high yield, even though global high yield has been in sell-off mode. These returns very competitive, but much more reliable if the base yields are worth going after. Well, the S&P 500 after this rally is less than 1.8% cash-on-cash dividend yield, whereas these two high yield examples, global 7.2 and domestic just below 8%, much more attractive even if the 30-year U.S. Treasury rises to 4%. If you have a long government securities allocation in the 401k, the value is likely down by about 10% for the year and just a yield of around 2.5% to 3%. That's the danger for fixed income investors. Do you want to be in the right part of fixed income, or do you take a drubbing when interest rates rise? This is the NASDAQ over a 10-year period, 1995 through 2005. The tech-heavy NASDAQ, of course, the famous tech correction, which lasted until October of 2002. So you can see this 7 years going back to about where it started after a massive rally. This implosion in value was the big danger in the tech wreck of 2000-2001. And you can see the time period even after 2005, still not back anywhere near previous highs. In fact, for many companies and the indexes, it took about 20 years to get back over that peak. This is oil, which has had a bear cycle, arguably. There's $27 barrel oil. There's the pipes, the pipeline prices in an index, plus oil prices back converging before the big sell-off. And since that time, oil has rallied a total of 187%. The pipelines generally lag and follow, but they're only up about 40% with a 9% yield. This differential, potential appreciation of 140% for the pipelines now that their cash flows have improved dramatically. Did General Electric bottom this week? Here we see a bounce in General Electric. It was up 10% in a couple of days. And of course, it's been a long, miserable slide for General Electric. And this could signal that somewhere between here and the end of the year, GE may have actually found a bottom. This week's tech sell-off had Amazon and Facebook down 2%. We had Google and Netflix down 3%, and that danger is something we'll talk about on the Long Play program this weekend. Go to NetWorthRadio.com for the extended charts, graphs, and this weekend's program. I'm Spencer McGowan, your financial weatherman, President, McGowan Group. Thank you for joining us today. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations and bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.